And a good afternoon, ladies and gentlemen. This is Jimmy, your host for today. This is another trading psychology live stream with me, brought to you by the Birb Nest. I did a series about biases. The last few weeks, we talked a lot about some of the most common biases, like post-purchase rationalization. We talked about confirmation bias. We talked about hindsight bias. And in today's live stream, I would like to talk about loss aversion bias, which is also one of the most tough, challenging biases to get rid of. But in today's session, I will help you how to get rid of this challenging bias. Before I'm going to continue, this is a sponsored video of our video of our partners. Meanwhile, I want you to think about a moment where you have suffered loss aversion. Loss aversion is nothing else than being afraid to lose money.
PrimeXPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXPT in minutes.
YFDI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirdpress.com/YFDI. Bistro is a decentralized peer-to-peer food marketplace that makes ordering food more convenient and rewarding for both providers and customers. Learn more at thebirdpress.com/bistro. CryptoCart bridges the gap between DeFi and e-commerce by allowing you to directly spend your crypto on countless real-world goods. Learn more at thebirdpress.com/CryptoCart. Equinix is a NASDAQ-listed digital assets company offering crypto exchange, custody, asset management, borrowing and lending services, and more. Enhance your crypto wealth today at thebirdnest.com/Equinix.
And welcome everyone. This is Jimmy, your host for today. This is another trading psychology session. Now, guys, we know the market is green today. Bitcoin looks good. However, we need to protect our mental capital because in the coming months or weeks, the market will give us a lot of liquidity to sell our bags at premium prices. However, if you're stuck in this notion of go big or go home, or if you're not willing to sell, then you will most likely will become a bag holder against your own will. This session is all about how to cultivate the right trading mindset. And I'm doing this for quite a while. I'm using NLP techniques combined with some neurology and psychology. Just to be fair here, I'm not a psychologist at all. Certified, she's our experienced and licensed psychologist, also a PhD with a PhD degree. I use neurology, and I've a big, deep passion for psychology, and I'm combining this with some NLP techniques. So, guys, before I'm going to move on, listen. This is your safe space. So, if you have any questions about trading psychology, mindset, about things you struggle with when it comes to trading, ask me, share with me in the chat, share experiences, because that's the way how we learn. And I think each of you, every one of you listening right now live, I think you're special. And everyone who's listening to this recording later, I also think you're special because you are dedicating at this moment a few minutes of your precious, valuable time to learn something about trading psychology. Kudos for that. However, just listening to me, guys, it's not enough. What I want you to do is being present, fully focused, because this is just the, let's say, 50% of success, and the remaining 50% is just by playing full out, because there is a reason why little kids, they learn so quickly. They learn without boundaries. They learn and they do. And that's also what we need to do. We need to learn and we need to do. And that's the way how we evolve and how we grow. Because we all know now, we live now in a era where knowing is not enough. And knowing and not doing is the same basically as not knowing. So at the end of this session, we will know some stuff and we will also apply them, so we allow ourselves to go to the next level. Who agrees with me? Who thinks this is a good plan? Well, I think it's a good plan, because I know that's the way how we break through. Because all big leaders, all big smart traders, they do this. They listen, they absorb, they digest information, they apply, and they teach. And that's the way to the progress. And progress equals happiness. So, by the way, guys, if you have any question, tell me. Then tell me in the chat, I have a question, Jimmy, help me out. Okay, guys, the last few weeks, we talked about different biases. And I will not go again, I will not discuss all these biases again, maybe on a more general level, because today I want to talk more deeply about loss aversion bias, which is also one of the most, let's say, difficult bias to overcome. But before we continue, as you know, I'm a NLP coach. At this moment, I'm also pursuing my title as NLP Master Coach. And there are a few presuppositions in NLP. A presupposition is something we see as something which is true in our model. So it's one, the map is not a territory. And I think this is really important to remember, guys. As traders, this is important. The map is not a territory, because we tap into this three-dimensional world through our five senses. However, when we receive this information, we create a picture, a mental picture or a emotional picture in our brain. That picture doesn't equal the outer world. So what we have received on information is just a reflection of the reality. It might or might not make sense, but I think this is important to understand. Otherwise, I will have a hard time to explain you about different biases. The map is not a territory. Secondly, all behavior, even the most awful or bizarre, they have a positive intention. They have a positive intention. An example, someone who's always lying, he's maybe afraid to be rejected by his community or by his friends, so he lies things. Or someone who's always stealing, it's his way of getting attention from his mother or his brother or someone else. Even criminals, at the end of the day, if you look at their behavior, which is awful and bizarre and criminal, and their intention, the intention often is not criminal or negative. It serves a certain purpose, a strategy. And the same goes for training, guys. We know that sometimes training is all about behavior. Some people, they practice bad training behavior, but it has a positive intention. For example, moving your stop loss is not a good behavior, but the intention is good to protect your capital. Well, it's the idea, right, behind the action. But still, the behavior is not good and it will lead to bad outcome. So behavior is not always aligned with your intention. This is also something you need to remember before you're going to move on. Does this make sense, guys? Or it doesn't make sense? If it doesn't make sense, let me know. If it makes sense, let me know. So I have showed this picture also in my previous sessions. Nothing wrong to share it again. So we tap into this world through our five senses: sight, sound, touch, smell, taste. Well, maybe in trading, smell and taste is not really that relevant, although I do use some fragrances in my room to create a strong trading mindset. But we have these senses. We use them to tap into this world. But if we receive information, we automatically delete information, or we distort information, or we generalize information. Generalization is longing Bitcoin is always good, or distorting information is when you distort basically the reality, and you don't see the reality as how it is. Deleting information is also something we often do automatically, by the way, subconsciously. A good example in trading context is when you're in a trade and you hear or you're in an investment and you hear some negative news or things about your project you have invested in. You will try to distort this information or delete this information so it can fit your bias. We all do this. We don't receive the information as how it is. We receive the information based on a few filters. I'm gonna name a few. It's memories, our values and beliefs. And with beliefs, it's not only religious beliefs, but also internal beliefs about ourselves and the world. So I think everyone has a self-image, a God image, and a world image. So we have an image of ourselves. We have an image of a higher power. I call this the God image. And we have an image of the world. I call this the world image. And it's also based on language, decisions, metaprogram, but that's maybe too technical NLP. So skip that. So with this NLP communication model, I'm trying to explain you this. The way we receive information, collect information, store information is not the reality. It's just a reflection of what's going out there. It's just a reflection of the real reality. This is something you guys need to memorize. So your subconscious mind is really powerful. It has a few, let's say, tasks, core activities. So your subconscious mind is responsible to store information, especially emotional information. It's responsible for communication with your whole body, through your nerve system. It's here to protect your ego, and trading is also about ego. I talked about this topic many, many times. Trading is about ego eventually. However, I'm not saying this is good, but our ego is here. Our subconscious mind is here to protect the pride of our ego. And it's also here to suppress negative emotion, which is, by the way, not good. And it can activate our fight, flight, freeze modus. And it's here also to to protect our energy. That's the reason why most people, they go for the path of least resistance. And it's not that intelligent. So your subconscious mind is intelligent, but it's not intelligent as in making logical decisions. It's actually your system one. It's the system that makes really quickly decisions. It's also filling in the gaps without based on your filters. And it's also eavesdropping, your internal talk. But that's actually a topic for the next time. So we talked about several biases. So it's we talked about post-purchase rationalization and post-purchase rationalization. Sorry, sometimes it's such a tongue twister. It's also known as a choice supportive bias. What happens is when you purchase something, a product or a service or a coin. Let's say, for example, just name a coin. One of you guys, just name a coin. Otherwise, I will name a coin. Let's say Litecoin or Ethereum, Bitcoin Cash or Matic. I don't care. XDB, GoChain. And I purchased this coin. So I'm a token holder. It's now in my gold wallet or it's on exchange. It doesn't matter that much. But then what we automatically do is we trying to find reasons and justifications to justify our purchase. For example, Cardano. We bought a shitload of Cardano, let's say last week, and then we dive more into this project of Cardano, and we check the announcements, and then we're trying to find all these reasons to hold our bags. This is a form of post-purchase rationalization. And another example is if you have a certain amount of money, and as you know, each dollar you can only spend it once, and you had to make a decision, or spending it on Cardano or on, let's say, a Litecoin. And you make this decision to spend it on Cardano. Obviously, you can spend it on both, but let's say in this example, you can only choose two. So because you have spent your money invested in Cardano and not in Litecoin, you will try to find reasons for not trading or buying Litecoin after you have purchased Cardano. This is also a form of post-purchase rationalization, which is not always that healthy. And then we also talked about hindsight bias. So in hindsight, when we see that the market is moving in a certain way, in hindsight, we think we had, that we have foreseen that. And if it happens multiple times, then you have this, thinking that you can predict the future. And if you think you can predict the future, then you have just opened the door to a lot of destruction, dissatisfaction, depression, and stress. Because once you think that you know what will happen, then you will deviate from your system, from risk management principles, money management principles, and so on and so on. So hindsight bias is also a really strong bias when it comes to trading. And we also talked about confirmation bias. And my NLP model I showed a few minutes ago is a really great example of it. So what we have made a decision, we try to only allow information that's in line with our bias, and we basically trying to distort and delete information that's against our bias. Who understand this principle of confirmation bias, or who has suffered from this confirmation bias or experienced this confirmation bias? Someone in the chat, let me know. By the way, guys, there is this like button on YouTube. I'm sure you know how it looks like. I'm doing this all for free. If you want, please give me a like. It will help me to produce more content about trading psychology. It's just one click. Oh, yeah. Okay, guys. By the way, guys, if you have any questions, please do let me know. I love questions, right? I love questions. And if you don't agree with me, just let me know. Or if you want to challenge something, just let me know in the chat. So I'm here to help you guys. And I'm also here to learn from you, by the way. So loss aversion, guys. So loss aversion is basically the idea that we hate to lose, and that we experience a loss much more than gains. So Daniel Kahneman and Amos Tversky, two psychologists, have conducted a lot of research, by the way. Books, the traditional psychology books, they're full of their researchers and their notes, but they have observed that the pain of losing is psychologically twice up to 3 times more powerful than the pleasure of gaining. So an example, guys. I want to give you an example from a non-trading context first. Let's say here, Biplop, you're a psychology student, right? So after your graduation, you will work somewhere. Let's say you will work for a nice company, and then you work there as a psychologist. Then they will promote you to a senior psychologist, right? So you will make this step from associate psychologist or a junior psychologist, if you will, to a senior psychologist. and you're really happy with this, with gaining this new title, gaining this new role. But then after 2 years, your boss will tell you, well, we're not that satisfied with you. We're going to downgrade you. We're going to change your role to from senior psychologist to junior psychologist. So the pain of downgrade is up to 3 times more than the pleasure of gaining your role. So this is the same for training, guys. If you have lost, let's say, a trade and you lost $100, you basically need to make $200 back in order to compensate your pain. That's loss aversion. So loss aversion is actually a really strong, let's say, expression of fear. That's the whole idea about loss aversion. It's actually expression of fear, and we don't treat gains and losses in a linear way. It's rather the opposite. So a bad trade has more weight, has more emotional load, has more emotional, how they call that? Emotionally, it's way stronger than winning a trade. And in different studies, maybe you might not know it, but I'm also a big fan of neuroscience. Always trying to keep up with neuroscience and latest updates, is that neuroscience have detected more brain activity only if we think about potential losses. So the amygdala will be more active in your brain. So your amygdala, you have 2 amygdalas. They're basically, let's say, responsible for your fear response, and they activate your fight, flight, freeze modus. And just by thinking about losing money or losing things that's really valuable for you, then this alone will activate your brain. Let me see, are there any questions? Yeah, I think this what Nick is saying. If I make a call and it goes a different way, I've prepared myself for the trade and I stick with the decision and analysis made. I remind myself why I made that call and to be happy with it. I think this is a really good mindset, by the way. This is the mindset. This is the mindset we all need to have. We need to be, we need to feel comfortable with losing. It sounds strange, but the more you feel comfortable with losing, the more focus you will bring to your process. And where your focus goes, your energy flows. So if your energy is flowing to your P&L, which you, by the way, cannot control, in essence, well, you cannot control your P&L unless you take the risk to leverage Bitcoin with 100x, then yeah, you can lose all your money. But well, yeah, you cannot control your P&L, but you can control your behavior. So be mindful about that, guys. So loss aversion. Loss aversion can manifest in different ways. So one, if you're in a trade and you see that the trade, it has hit your entry, and price is moving up and down a little bit, and it's going towards the south, so it's not against so basically it's against your plan, and you're really afraid that you get stopped out, and then you move your stop loss. You move your stop loss because you're afraid to lose, and this is bad behavior. Loss aversion also opens the door for gambling. So what people do is they add to a losing position, right? If they if the trade goes against them, or they move their stop losses, or they take another impulsive trade, this is bad. Loss aversion can also open the door to FOMO, to fear of missing out. Because if you have lost a trade, you want to make it, you want to make it up. You want to compensate your previous losses. And obviously, loss aversion will also open the door towards aggressive revenge trades. Someone here committed revenge trades? Well, I did. I'm not gonna lie. I'm guilty. Are there more people guilty here? So what you need to understand, ladies and gentlemen, is that this loss aversion is a strong thing. And loss aversion is like, it's hardwired in your brain. It's not something, look, I do believe in a top-down mechanism. So if we understand how, biases work and how they manifest in our brain and how our brain functions, yes, it gives us more awareness about this, but only awareness is not enough. I will give you later some tips and tricks how you can combat loss aversion. My promise was 3 tips. Well, I'm gonna give you more than 3 tips. So with loss aversion and loss aversion bias, I want you to understand that it makes us blind and it takes over our rational thinking. It opens the door to impulsive behavior, and it causes us to deviate from our trading plan, to abandon trading principles. I'm pretty sure most of you are really bright and smart, and if not most of you, all of you do believe that risk management is important, money management is important, trading psychology is important. But if you're really overwhelmed by a loss or a series of losses, then you will deviate basically from each system, and you will make a lot of mistakes. Well, I'm going to be honest, this is also one of the main reasons why many traders are not able to make consistent profit in the long run. It goes up and down. I mean, their P&L goes with 60% up, and then it goes down with another, let's say, 40% down, and then up and down. This is not the type of trader you want to become. You want to have consistent growth. So loss aversion and how to overcome. Well, I do believe that metacognition is really important. Metacognition is to become aware of your of your unconscious behavior. So it helps to write it down, to share feelings with others. We as traders, we need to learn to accept and to embrace losses without a negative feeling. What I do, and this might sound a little bit strange to some of you, but if I'm in a trade and I got stopped out, right? It doesn't matter if I'm stopped out in profit or in loss, because when I'm in a trade and my trade, reaches target point 1 and then taking profit 2, and then I move my stop loss above my entry, then it's basically a risk-free trade, and sometimes the price goes down and I'm stopped out. This happens. Sometimes I set my I'm in a trade, and then the trade goes against me, and then it hits my stop loss and I lost some money. It happens all the time, by the way. Nothing wrong with that. But when that happens, I reward myself, because using a stop loss is good behavior. No matter what people are telling you, taking profit is good behavior, but letting your trade, if it invalidates in itself, then that itself is also good trading behavior, and you can reward yourself for that with something small. Or if you're going to buy something for yourself, make sure you let's say if you want to reward yourself for your trading progress, make sure you also reward yourself for accepting the losses. This is a way how to think differently in respect to losses and loss aversion. As always, if you have a plan, respect the plan, and the plan, it will eventually also respect you. What also helps is to calculate your potential losses in advance, right? And imagine you have suffered some losses. What I normally do, and I also apply this technique in July, or I mean in May and June, is to lower my position size. Just to lower my position size. Normally, I risk. I apply 2% risk per trade, But sometimes I just apply 0.5% risk per trade, 0.5%. Small position size, I don't care, but I'm still in the game. I'm still learning. I'm still, it allows me to, to sharpen my edge and to develop as a trader. Let's see. We have a question. For a small trader, what would you suggest? Fear is always there. For the job order will depend on paycheck monthly. Small trader. It doesn't matter, small trader or big trader. My premise is, what I truly believe is, how you do anything is how you do everything. So also small trader should be aware of all these biases. A small trader can trade himself up so he can become a bigger trader. So you need to create good trading habits. Good trading habits is always applying stop losses, being aware of your trading psychology, and so on and so on. I hope this has answered your question, by the way. Any questions, ladies and gentlemen? By the way, if you haven't gave this live stream a like, I encourage you to give it a like. I'm pretty sure you know where to find the like button. So, a question. The last week I've been quite profitable, and now suddenly I lost senses of the mark. You haven't been hit with a significant loss, but I want to go back to my best form. Any advice of that one? I think this is a really interesting question. I'm not sure what your best form, exactly is, but it's, trading is indeed about performance. However, how the market moves is not within our circle of influence. So what you could do is to go back to the behavior you have showcased in your best form, write them down, and ask yourself, where am I now when it comes to this behavior? For example, you were able to find good trades based on, I don't know, MA or a classical trading pattern, RSI, I don't know, or some mood you were in, some state. It's like write them down, and write them down how you are now performing in relationship to what I just mentioned. Maybe if it doesn't make sense, please do let me know. So guys, so before I'm going to move on, let's share a different screen. I want to share something else because I want to make it more, how do you call that? Visible, this loss aversion thing. Wait. Share screen. Yeah. Oh yeah, silly me. I need to add this to the stream. Look, I have a risk calculator, by the way. You can download this on our Discord. It's for free. You can use it. You can share it. I don't care as long if you respect risk management. Look, and now I want your focus, guys, so you understand loss aversion and losses. Let's say you have 20K. That's your trading capital. And let's say your risk per trade is 2%. So if you have a risk of 2%, you're allowed to lose $400 on each trade. And you know from yourself that your average risk reward ratio is 3. So if you lose a trade, right? Let's say here, you have lost this amount of trades. You have lost 7 trades, right? You have lost here 7 trades. This has cost you $2,800. But on the other, what happens? What happens? Okay. By the way, should I make this more bigger for you? Because I want every one of you understand this. So you're taking 10 trades. 3 out of the 10 trades are winning trades, right? 7 out of the 10 trades are losing trades. So what happens here actually is at the end of this series, at the end of this 10 trades, your P&L is green. Your P&L is $800, right? It's $800. You lost 7 trades, you won 3 trades. That's also that's why the relationship between risk reward ratio and win rate is so important. But what I want you to understand is psychologically, mentally, emotionally, you have lost 21 trades and you just have won 3 trades. This, guys, listen to me. This, guys, is why, and girls, this is why trading is so difficult. Psychologically, emotionally, mentally, we have this feeling that we have lost more than we have gained. So psychologically, in this situation, you have lost 21 trades and you won 3 trades. Well, tell me, who feels happy when you tell them, well, you lost 21 trades and you just won 3 trades? I think most people, they will have this feeling of, okay, now I'm going to give up trading or trading is nothing for me. But this is what I mean with top-down mechanism. So if you understand a bias and how it can manifest in your brain and in your trading, then you have an edge, a psychological edge, a mental edge. So guys, any questions for me before I'm going to wrap up and making some dinner for my family? If not, we do have this 7 days trial for the Birb Nest. I would say give it a shot, give it a try. You don't need to buy it now. I would say give it a try. Check out our educational content. I mean, every day we produce educational content. We give a lot of good training calls. We also emphasize the importance of training psychology. I think it's the only training community where you'll have a NLP coach and a clinical psychologist. So I would say give it a try. Sign up for the 7 days free trial. And currently, if you decide to go for a plan, at this moment, the private mentoring plan is already sold out. It's our most popular plan at this moment, and the other plans are still, there are a lot of open slots for it. And if you pay with crypto, you get by default 10% discount, but you don't need to pay anything for the free trial because it's really free. You can try it for 7 days long. You can see if it aligns with with your personality and with your needs and with your wishes. If you like it, you can continue. If you don't like it, there's a bot, and this bot will kick you out of the Discord after 7 days. So I would say give it a try. You have nothing to lose. You have everything to earn, and this way you will also learn more about trading psychology. We do produce a lot of content, and we basically approach the market from all angles. It's not only trading psychology, right? That's really important. It's actually the combination of FATA data analytics. I do believe in on-chain data, and trading psychology. So it's actually the whole spectrum we cover, and so it's also the whole spectrum. I think it's important to have at least some basic understanding so you can evolve as a better investor or as a better trader. So guys, thank you very much for listening. If you have any questions, please do ask. My DMs are open. Ask me on Twitter or Discord, tag me, and I will come back to you. Thank you very much and hope to catch up soon. Bye bye for now. Have a fantastic Friday.